Let's take a look at how far it will go and why. Now again, we understand that that C here really is at that level 5. The correction is finished into an A. This B kicks back here, and there's that C. Now we're doing an internal 1, 2, there's a 3, there's a 4. Market is going to be doing a 5. Okay, so this is the end of the correction again. It's a leading diagonal. Remember, this is an Elliott structure. What you're seeing now that for our chart is a motive wave. This means that for investors or for position traders, buying the market would simply mean that you should be making money and the market should move all the way to the next neckline. This is again for position traders, all the way to 115 and 116. Current market, I believe, is at 106, all right? And just buying the market would simply necessitate that you have a stop below level 1. This is that level 1 we're looking at. You must have a stop at 92.50. You can even have a stop at 93. All right, let's take a look again at the internals. This is again a motive Elliott structure. There's a 1, 2, there has been a 3. There has been a 4A here showing in yellow. There has been an A, B, and a C. That's a 4B showing in yellow. And finally, that level 4 is complete. Degree 4 correction completes here in 4C, bounces right at the top of that internal one. That level 1 is really deep down here, right? The hairline doesn't really count. And at that point, we are doing now a wave 5. Okay, so that wave 5 is actually going to be labeled in yellow. That wave 5 is going to take us to the next neckline. This wave 5 usually must cycle-wise take us to the next neckline. And we have investigated the momentum plots, they're all positive, so it will take us to the next neckline. Next neckline is 116. So let's do the internals to see what kind of a retraction can we get into that wave in order to buy into it. So again, we're looking at that wave 5. That's what we're going to be segregating. It's going to be taking us to this neckline at 116. Internally, it does segregate into a 1, 2. There is an internal 2, 3, 4, 5. This is high degree 3 here. High degree 4 bounces right on top of that high degree 1. Internal degree 1. We have now wave 5 in yellow. All right. It already did the 1 and the 2, did the 3 and the 4. It's doing now, right now as we speak, a wave 5. Okay. Usually, as this wave matures, you will have a high degree 1 here at that point. At this point in particular, where you have a bit of a negative momentum, this matures into high degree 1, right, in yellow. And this makes what you are looking at here a high degree 3. That's why we have that high degree 3 label. If this is going to be the case, you get a degree 4 correction. This is one big if. You have to have the right momentum if this is going to work out. If you get that big correction, of course, the wave 3 will correct all the way down to level 1. We'll show this on the 4-hour chart. Again, as this matures, you get this lump here. There's a bit of a negative momentum right after it. This matures into a wave 1. Neckline becomes a bit higher. That one kicks up here. Becomes high degree level 1. All right. And usually, at the neckline, you get high degree level 3, all right? You get a correction 4. A correction 4 technically can test that level degree 1. If this is really going to be the case, then you get a very deep correction. Let's take a look at the structure. You remember you're seeing multiple heads and shoulders. That shoulder here. So you have 2 heads, you have 2 shoulders to the left. Right now, we just have 1 shoulder to the right. We're not yet done with the second shoulder to the right. So the second shoulder to the right could come in any minute. It will be a degree 4 correction, right? So it can be either one of 2 degree 4s. It could be an internal degree 4. It could be a higher degree 4. If it is an internal degree 4 that's going on right now, you get the market to drop all the way to test that internal level 1 and then move up into internal degree level 5. And we're still doing that 5 into 3. I hope everyone is following and no one is missing out. All right, it gets easier. So we're just looking at all the probabilities, but it really gets easier when we get to the decision-making process. If we are mistaken and this is really end of that wave 3, we get a higher degree 4, will bounce at that same internal level 1. All right, so it doesn't really matter what you label them. You're going to get a bounce at that level 1 sometime. It's just a matter of time really. Either this is a 3 or a 5, you get a correction back to level 1. All right. Consider even that if this becomes a wave 5, usually it becomes a very big ending diagonal and you get a correction that will test the neckline at the most also that level. So you always want to have an entry limit on top of that level. That's why you want to have an entry at 104, 103.7. So that level 1 is, we have two projections for level 1. We have that green level 1 and that yellow level 1. Yellow level 1 comes here at 105.22. We take the best, of course. The green level 1 comes in at 103. So we always have a half size at 103.5, 103.7, 103. We'll take the exact level when we go live. Okay, so this is only half size. The remaining size, or the first size that we want to get into the market when we go live market, you find that all the momentum plots are positive. Everything is really positive. All right, on all fronts, and therefore you're not gonna get that wave 4 right away. We use half size to buy upfront because upfront at 106 takes us to 116. The current fundamentals will drive us to 116. Right? Okay, so these current fundamentals show here on momentum on the 30 minutes. They show on momentum on the half hour, very strong, and therefore the market is bullish. It's just going higher. So before we get to see that 103 or 104, the current fundamentals indicate that everyone is stacking up on oil. They're driving prices all the way to 116 before they decide it's too high and let the market fall all the way down to 103.5.